Welcome back. As promised, we have the management of KPIT Technologies joining us now. So, muted set, but the company is guiding for much better second half. Some growth in third quarter, but much better growth in the fourth quarter, and a promising FY27 as well. We have Mr. Kishor Patil joining us, Managing Director and CEO at KPIT Technologies. Thanks very much. Good morning, Prashant this side. I want to, of course, start by talking about this big strategic deal that you've announced, sir. $100 million plus is the TCV. And this is spread out over 3 years. Could you talk to us a little bit about how much this could add in terms of, top line, what it could mean for margins as well?
So, generally, as I said, our general growth comes through a regular increase in the business. But in some cases where there is a more strategic strategic engagement with a new client, typically then this kind of a deal can happen. And in this case, it is a multi-domain, multi-year kind of a thing where we are taking the full ownership of certain domains of the client, which include basically electrification. It includes a digital cockpit and some part of autonomy. And that's how it's this kind of domain we are taking. And generally, all these deals would not be would not have any margin dilution. The ramp up would start from already during this quarter. We have already started the engagement, and it will keep on increasing. And over the next year, it will ramp up fully, and then next 2 years we'll get the highest returns. That's how it.
All right. Hi, sir. Good morning, and good to see you, and Mr. Patil. I was looking at your constant currency revenue growth. It was around 0.3% quarter on quarter. Caresoft acquisition, that would have contributed ballpark 2.5%, which means the organic growth actually was negative. Could you explain this to us? And in quarter 3, do you get back to a positive organic growth number?
Absolutely. I think what we have reported is minus 2.3% negative constant currency growth, while the reported growth is higher. But we have said that in the Q3, organic growth will be flattish to positive. And in Q4, there will be a meaningful growth. So absolutely, that's what we are seeing. And that is not only on the back of this deal, specific deal, but it is also back of overall recovery we see. We see the positive discussions with our client. We see a positive traction in certain segment. Europe seems very positive. We see India very positive. We see certain areas in terms of autonomy, digital cockpit very positive, and aftermarket diagnostics very positive. And based on some of these technologies and regions, we see this as a way going forward.
Okay, all right. And Caresoft for the year will contribute around 5% to the revenues?
Caresoft would be, roughly, I would say, less than that. But yes, because we have been doing some business with them also in the past. Okay. So looking at that, net addition would be anywhere between 3 to 4%, maybe around that. But yes, but I think it will be there will be a growth now going forward in all in Caresoft too.
All right, but you're sticking to second half of the year will be better than the first half of the year, and
Absolutely.
if that is the case, you said that organic growth, one quarter's down, next quarter's flattish, quarter 4 will be better. For the year, what kind of organic growth should we work with?
I would not give still a number. I will give you in the next quarter end. But it is very obvious that there is a clear growth which we have been showing on quarter to quarter. So I think from that perspective, we will continue to go this. I will be in a position to give you a number next quarter.
But sir, you can't give us a number, Mr. Patil. Morning, sir. But can you give us some idea about what makes you confident? Because the lack of organic growth is something that's been weighing on the market's mind as well. So what are the kind of deals that you're hoping to close? What are the sort of conversations you're having with what kind of clients? that you think can get you back to growth?
I don't think I can say anything more than that, because we have already $230 million of wins. But more importantly, one large deal, which we have said. We said that we have already started working on that. It will start ramping from the next quarter. We have said that we see a very positive part of the commentary from the client. We have talked about the markets, Europe and some part of Asia, where we see a very good traction. We see also good traction in terms of off-highway and commercial, even in US and other parts. So I think these are the areas will give us growth.
So this is a large deal that will start ramping up from the current quarter, Q3.
It has already started during this quarter, but I'm saying it will go. It will ramp up next quarter and quarter after.
Okay. And sir, then what are the implications for margins? I mean, you're saying that growth will start coming back, organic growth. On the margin front, you're at 21%. So
I think,
yeah.
So basically two things. One is, as I think you would appreciate that with all the volatility, we are one of the company which maintained our margins. And the thing is, there are 2 to 3 reasons why we believe we will be in a position to continue to do this. First is, we have moved a lot of our business to, I would say, higher-ended service, which is solutioning. And from last year, we have doubled the revenue. About 18% of our business is in solutioning. I think that gives us a little higher margin, and that is one part. The second thing is, we are, of course, bringing efficiency in the operations with both of these kind of things, and we have not seen much pressure on the pricing.
Yeah.
So with all this, I think we will be in a position to maintain the margins.
Okay. That's an important... So just a question on the margin. That's an important point that you made, that you're not seeing pressure on pricing. And we're going to keep that in mind. But isn't there a wage hike? I'm not sure if you've already taken it in the third quarter. Are you planning to take one? So can you maintain 21% even in Q3, Q4?
I will give you 2 data points, and I will come to your specific question. Our fixed price projects have gone up significantly. If you look at it, it is, and that means that we have a fixed price project. We are not looking at rates in terms of per person, but overall project, and bringing the efficiency through AI and automation. All that we are doing, and that helps us to do that. Absolutely, we backed the increments. We will give some increments next quarter to many of the junior grades, and then from the quarter after to the senior grades. It's selective for the high performers, which we are giving. And that is backed in what the numbers we are giving and the margins.
Mr. Patil, just one question from my side. We had another IT services company, which essentially, I'm paraphrasing, but what they said is that because clients are focused so much on AI and boosting spending towards that, especially in the TMT sector, existing sort of business, perhaps, I mean, the focus, there's a limited amount of resource, so you're focusing on one and maybe at the margin at the expense of the other. I think you've also in your, release characterized that AI-led holistic solutions are eating away at the existing revenue base. There was some number that you specified. Could you just talk to us about this? I mean, what's the direction of travel? Is this likely to, chip away at the existing revenue base?
Yeah, I think we have gone away from the model where we believe that there is a ODC and there are certain headcount, and that's what will continue to give us the revenue, and then you add certain headcount. I think the industry has moved away from that and is moving away significantly. So from our perspective, basically, the whole purpose for us is we expand and give a more holistic solution, not only what we have been doing, but much more than that, and take the full ownership of a project. And that we do along with the AI and other things. So our basic objective is to continue and maintain the revenue as far as possible, naturally what is relevant, but give a much higher productivity to the client. And that is what we are trying to do.
But it will not eat away from the existing base of revenue, all of this? No.
But in some existing, so what I'm saying is existing part of the revenue will get transformed. But of course, the growth will come from the places where I mentioned. But this will actually give us a higher margin and also some additional revenues. So I think it's a process which we are taking, because when the initial projects you take, it's different. But we believe actually on the back of this, there will be a larger revenues we can take from the client.
Okay, all right. And of course, as you said briefly, productivity gains as well, which perhaps come in. Yeah, thanks very much, Mr. Patil. Appreciate you joining us, and good speaking with you. As you said, it's a transition phase. I think not just for you, but for many other companies, all this is underway at this point in time.